Man, we are so lucky. How you doing, buddy?
Doing great, Michael. Good to see you.
Hey, so I want to talk about June 10th. June 10th, if you don't know what June 10th is, that is CPI day. June 10th. So we just had a CPI reading last time of 8.3. It rolled over from the previous month at 8.5. The reason June 10th is important is it has a chance to signal one of two things. So I want to paint a vision for you. I'll give you my opinion. I will give you the other side because I always study the other side. And then you and I will just rap about it. Sound good?
Yep, let's do it.
So my current stance, and I called this about 2 weeks ago, is I believe, unfortunately, inflation has not peaked. I believe that CPI will actually go up. So it'll be, 8.5, 8.3. I think we go back to 8.5, which would be not good. What that means is the Fed needs to get off their ass and be more aggressive, which means the great reset in asset prices continues. More pain ahead. It doesn't give me a great joy to say this, but it is what I believe. And then over the weekend, there is a pretty famous Wall Street, I'll call him analyst. If he may be a fund manager, I'm not sure. His name is Whitney Tilson. He has come out saying that June 10th is important. There's an inflation surprise. He had a 1 hour webinar on this, which I watched. The netted out is he thinks on June 10th, inflation surprises to the downside.
Took you an hour to get, it took him an hour to say that?
Yeah, of course, because he's selling newsletters and all this other nonsense. But again, the reason it's important to me is it was opposite of what I believe. And I always try to see the other side because I'm wrong all the time and I'm making big decisions with my family. So I wanted to hear it. And again, if he's right, and again, inflation breaks and goes to, I don't know, 7.8, 7.7, something like that, that will be enough to give Fed cover to slow down. He actually believes that the Fed may not raise rates in June because, again, CPI June 10th comes out before the Fed meeting. So again, June 10th could be a pretty impressive day. It may signal to the Fed to get A, more aggressive, if I'm right, or B, back off, which again, if the Fed backs off, dude, the buy the dip crowd's going to go flipping nuts. So I just had to ask you, where do you come down on this? I'm throwing a lot at you. What do you think?
Well, yeah, I mean, there's some banks that have come out, and have said the same thing that, inflation's peak, CPI's peak. And when you look at core CPI and how it's measured and the things that they're measuring, I mean, they're right. Used car prices are coming down, starting to roll over a little bit. I don't know about new car prices, but I don't think they're counting the things that really impact inflation. When you look at the cost of housing and, energy and things like that are still up and going up and haven't come down. Food, I think, is food in CPI? I can't remember what all.
It's not, they strip energy and food in core, but it is in headline. Yes.
Okay. So core is one thing, headline's another. So I think headline's definitely going to be up. Some of the core is coming down, like,
yeah, and let's be clear. I'm talking about headline, just so we
yeah. So headline, I don't see that coming down. I think that's still going on. I see it every day. You see it every day.
Yeah,
everybody watching this sees it every day. So when you hear people come out and say that's, peaked or coming down right this minute, doesn't make any sense because we still haven't felt the effects of the China lockdowns and all that. I mean, you can look at this chart that shows all of the cargo ships, at sea. It's thousands of them that still haven't been able to dock, and China is still locked down.
Yeah, Shanghai
going through it. Of course, they don't really affect a whole lot of any of the world economy, but you got the war going on. You've got the food situation there. You've got the baby food situation. Yeah. I mean, there's just so much out there that we're still dealing with. It's like expecting an all-time high in the stock market without the Fed. It's just like it just doesn't make any sense.
So I made this call before I watched this video. I love seeing the other side because I do this a lot, but sometimes, I get tunnel vision and I hate tunnel vision. So I try to look at the other side. I just don't get it. Oil, the base of almost everything, energy is up this month. Diesel, which is the back of a lot of transportation, at record highs. Food, going nuts. We're shortages. We have countries like the country, I think, of India disallowed exports of wheat, right? That is the intake for lots of food, calories in that. And then, oh, by the way, rent equivalent, it has always been wrong, right? The last reading was 5.4%. It's come out at 18. The thing about rent is it's a 6-month lag.
Yeah.
So we are just about to get some of the biggest bumps coming. So I personally still don't agree, but I think it's an interesting concept because if he's right, frankly, if he's right, you want to buy the dip. I don't see it.
No, he's way off. And again, it's lagging. So now you're coming into the thing that, like, to your point, some of those rent, increases and things like that are going to start showing up in the numbers. But then you're going to have the summer premium, that we always get anyways. We always get a little bump in the summer on food and things, and travel and gas. Always gets a little bump in the summer. Well, that's extreme right now. Travel's through the roof. Airline tickets, hotels, Airbnb, all that stuff's going up. So those are going to be baked into the fall, headline number. So I don't see it dipping the headline. I don't see it dipping unless they really fudge the numbers and manipulate it. I don't see how that dips before the end of the year.
Yeah, I agree. Yeah, I think we're certainly, again, there's some things in the number, like these things called base effect, that eventually small numbers roll off and big numbers come in. I don't see inflation going below 6-7% by the end, at least the headline number.
Yeah, by their rates now. At the consumer level, that makes the difference. Yeah, that ain't changing. Now there's some demand destruction out there. People are pulling back a little bit, and companies are laying off, and things like that. So there's, you're going to have a little bit of that, but that's just your demand destruction. Yeah. That's not affecting prices.
Yeah, it's a lot. In my opinion, it's a lot. This is like a slow moving train wreck. We just have the first, I don't know what it's called. I don't know what a train is called, but the first section is off. We still have all these other sections to kind of, again, to me, I haven't changed my call from 2 months ago. The recession is next year. We have stagflation this year, high inflation, low growth, and then recession next year. I think the Fed has 3 choices. They're raising rates now. A lot of people, it's shocking to me how many people believe, and they seem to be all Wall Street people, the Fed's going to raise rates and they're going to come down this year. I'm like, I don't see it. There are some people that are like, the Fed's going to jack up and they're going to be even, like just stay flat for a year. And then there's the guys like me. They're like, dude, inflation is a problem. They can't change. We're going up to 3 and we'll ultimately get to 4 by the summer of next year. Do you have any thoughts on any of that?
Well, the election cycle could play into a lot of that. So it depends on where we are from an inflation standpoint come the election. And, depending on the outcome of the election, that could change the Fed narrative, in terms of what they want to do and the direction they're going to head. But in the world that we're in right now, with inflation where it's at, the Fed has to keep fighting. That is their mission now. They've said, forget Wall Street. We don't care.
Yeah,
we are fighting inflation. And, they're going to let the markets do what they do without an outlier event like nuclear war or another pandemic or something like that. They're not going to rescue the markets just because they've raised interest rates. They've told the market, you're on your own. Yeah,
Powell has told them 2 or 3 times in Fed speak that I don't care. I don't care.
So I don't think you'll see them intervene, if they do at all, unless you get back to pandemic levels or March 2009 levels where the market just drops, 50, 60%. Then you might see them start to talk about something, but we're nowhere near that. I mean, you're only down 20. I don't even know where we're at today, but you're not even down 20% across the board. Just the NASDAQ, S&P might have just entered, depending on where it finishes the week out. Dow still, 15% down. So, I mean, we've got a long way to go before the Fed gets interested in intervening in the markets.
Yeah, they're not. I think it's pretty clear. Again, what people don't realize is there's a lot of people that have experienced the Fed put, right? When we have inflation below 2%, the Fed can care about asset prices. We don't have 2% inflation. We have 8.5, arguably 11 or 12. I've actually corrected CPI for the correct rent calculation. It's over 11, right? So crazy stuff. Greg, where can people find you?
Yeah, gregdickerson.com. That's where all my information lives. Go check it out.
Thanks, buddy. I appreciate you.